Okay, my beautiful friends, it's finally here. Friday. Enough of this insanity, seriously. And we're going to talk more about the insanity. Earlier today, I wrote this. The 3 F's. Yeah? The 3 F's. That's what's driving this market. Well, record highs again across the board. It's incredible. Doesn't stop. And it won't. The direction for this market is higher. Like I explained to you earlier today, melt up. And I'm going to cover where we're going in a little more detail here. So, yeah, stocks did finish higher across the board. No surprise to you. Metals did nothing. Cryptocurrencies did nothing. Again, no surprise to you. Now, crude oil. Crude oil did fall today, about 1.3%. I want to explain something to you about how bullish this is for crude oil. Nothing goes up with regard to an asset's price action in a straight line. Okay? Pullbacks are bullish. You understand? They're bullish. So, the reason why crude oil fell today is because there was an increase in rig counts. Okay, big whoopee-doo. Do you think that OPEC, the military-industrial complex, the banks, are going to allow crude oil to not continue higher? Because there's more rigs out there? We will get a refinery fire, a bombing, a terror threat, maybe even something along those lines occur. It will be propped up. $61 a barrel was still over 60, almost 61 still. You think that they're done and, oh, that's it, crude's going back down in this environment? If that's the case, I want you to think again, because that's not happening here. What else plays right into this besides the freak show and the Fed and fear? Well, how many of you recall the repeated, incessant calls for a weaker dollar from a very nice individual, a little overweight, with a strange complexion, with a comb over? You know who I'm talking about? Yeah. That individual continues to batter, like a battering ram, about how he wants a weaker dollar, weaker dollar, weaker dollar. What does that mean for crude oil? We know that metals and cryptocurrencies have no bearing on reality with regard to price action, but crude oil also. It's only about, well, I would have to say right now, 60% overvalued. Yeah, 60% overvalued. But it's going higher, and if he gets his wish, and he will, okay, mark my words here, the dollar is going to get weaker. Crude oil is priced in dollars. So what does that mean if the dollar gets weaker? You got it? So you understand where we're going here with regard to crude oil. It's unbelievable. Now let's talk about the 3 freaking F's. All right, that's driving this market. Well, actually, there's something else too. You know, before we get to the 3 F's, I want you to understand what they're doing, what these corporations are doing. They're being allowed to borrow cash for zero, nothing. And what are they doing with it? They're buying back shares of their own stock. Not just that. You remember all the cash that was going to be repatriated here to the United States? Oh, yeah, that is happening. Let's give the president credit. These companies are repatriating cash, but I'll give you one guess as to what they're doing with that repatriated cash. Oh, it's not to grow their businesses. No, it's to increase the price action of their shares of stock. And how are they doing that? By buying back shares of their own lovely stock. Now, I remember someone explaining to you when this was sold to the American people, the president out there, oh yeah, we're going to get these companies to repatriate their cash. They're going to grow their businesses and they're going to hire people. I laughed publicly and I said, that's not going to happen. What's going to happen is these companies are going to buy back shares of their stock. Ding, 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 ding. Mannarino nails it to the wall yet again. To the wall. All right? Look, you think you can believe a syllable that comes out of the mouth of any of these politicians? No. If you do, and you admit that they all lie, well, there's something going on here. Maybe you got a little screw loose. I don't know. But when you hear something like that, oh, we're going to repatriate cash, and these companies, they're going to hire people. They're going to build their businesses because that's how we're going to make America great again. And then all of a sudden, they buy back shares of their own stock because that was the plan from the get-go. No questions asked. Don't ask. You can't ask because, it was sold to you that these companies were going to build their businesses and hire people. Oh, do you believe for a split second that this wasn't set up in advance? You think the president was shocked? Oh my God. You mean they're not hiring people? You mean they're not building their business? You mean they're buying back shares of their own stock? Do you really think he was shocked about that? Honestly? No. Okay, so that's a big player here as to why stocks are continuing to melt up. It's the end of the year. You understand this is how bonuses are based. The corporate CEOs, the bigwigs at the United States of corporate America, their year-end bonus is based on stock share price. Period. That's all. So this is another reason why stocks are melting up here. Let's go to the F's here, the three F's. You got the Fed in here. You got the Fed in here, and I mean deep in here, pumping unbelievable amounts of cash into this debt market. I mean, it's unbelievable. And that is obviously a major driver as to why cash is making its way into the stock market. It's a mechanism that I explained to you was being put in place to keep the yield curve appearing normal. I said this when we found out that the banks were going to be involved in this repo scam, moving liquidity back and forth between each other to keep the short end of the yield curve suppressed, to give the illusion of liquidity in the system for which it's drying up. I said it's to normalize the slope, and that would push cash into the stock market. Well, let's see. Ding, ding, ding. Again. Okay, very nice. Now let's talk about the freak show. So we got the Fed. Now the members of the Fed are part of the freak show who keep talking about, yesterday, Fed Williams, repo is working really well. I think we should just continue this thing because it's just working. Now, this guy again told you it's going to be perpetual. They can't stop it. If they do, the moment they stop the repo scam, which is being pulled on not just the American people, but the people of the world. Again, it's a mechanism to give the illusion of liquidity, a mechanism to keep the short end of the curve suppressed. Otherwise, we would have the most inverted yield curve in history. You understand that? Can't happen. So, the scam will continue. If they were to stop, immediately the yield curve would become hyper inverted and cash would bleed right out of the stock market. And worse than that, the credit markets would lock up. That's what they're really doing. They're trying to prevent a credit freeze, which is going to happen. This is all going to stop dead in its tracks at one particular time. And do you think that's not in the plan? You know it is. A complete and utter wipeout of the middle class. That's the main plan here. Now, freak show. So it's the members of the Fed, it's the Confederacy of Dunces who are orgasmic. All over the place, CNBC especially, all of them. Bloomberg, Fox Business, they parade out, the hot ladies, and they're in full multi-orgasmic mode, and this is getting people excited. Let's buy stocks. Let's buy stocks. It's the institutions that are doing this. You understand? It's not guys like me. It's not guys and girls like you. Oh no, we're just riding the wave. And in the meantime, what we're doing, we're getting richer doing this. Again, it's a beautiful scenario. And then what do? Number one thing we do is take a fraction of those profits, donate it to a charity we believe in, because you must pay it forward. Period. And number two, we're converting profits into other assets, hard assets, suppressed assets, cryptocurrencies as well. That's my opinion. You can have a fit about it, but you stay in the dollar that they're faking right now through this repo scam, which is nothing but a liquidity illusion. Okay, you would rather stay in the dollar, a Federal Reserve issued note that they own, than a cryptocurrency that you own that is not central bank issued. Oh, okay, got it. I'll retire to Bedlam. Anyway, so that the freak show, you know what that is, in fear. Fear. Two things drive this market: greed and fear. Fear is stronger. Right now, the fear of missing out is also driving stocks higher. Oh, yeah. But I alluded to this yesterday. When we get closer to the new year, and we're only very, very close to it now, we're going to need to look for a drop in the market. What would that mean? Being that you understand the markets probably better than most people on the planet who even work for the major banks, if you follow my blog. If we get a drop in January and everything else remains the same, where are stocks going, being that you know that pullbacks are bullish in this environment? Did you just have an epiphany? Yeah, you finally have seen the light. That's where we're going here. It's fake. It's managed. It's a communist, fascist market where not one single asset, not one, has a real price discovery mechanism behind it. And how do we know that? Because every asset, no matter what it may be, derives value from what's happening in the debt market. So when you have the first of the three F's here, the first of the three F's here, okay? You know what I want to say. I'm not going to do it. Taking the largest aspect of this market and manipulating it and rigging it like we have never seen. This is way worse than anything during the meltdown. And if everything derives value off of the debt market, how does one asset have a real price discovery mechanism? It's all fake. Understand what I'm trying to tell you. That the entire stock market, housing, currency, you name it, is a derivative of what's happening in the debt market to a large degree. Not purely, but to a large degree. This is true. Did you just have another epiphany? Oh, I bet you did. Anyway, look, this guy here, I love you from the heart. I mean that. And I have a lot of fun doing these silly videos. I really do. But I think they're incredibly informative. Honestly, I don't believe, and maybe I'm wrong, that there's someone else out here who puts, kind of a comical spin under unbelievable amounts of truth. And not only that, I'll tell you how to capitalize on this, how to beat this market for free. Do you know what you would have to pay for this kind of information if you were to hire, I don't know, one of the major Wall Street banks, 3 of which this year wanted to hire this guy? Do you know you would have to pay for that? But I sit here and I do for nothing because I want you to pay it forward. I really do. I want us all to get educated, understand the charade. I think you do. If you follow this blog, you're pretty smart. All right, with that said, people, again, I love all of you. It's the truth. This is Friday. And I'm going to leave you off with my favorite 3 things. You ready? You know what it is. You love each other, care about each other, and be charitable. Okay? If we all do these things, well, we're all going to be better off. It's the truth. Now, I will see you on Sunday, more than likely. I have an incredibly busy day tomorrow. I will do a Markets to Look Ahead segment. And not only am I going to do a Markets to Look Ahead segment, but I'm going to do what I did last week. I'm going to give you a couple of stock picks. All right, the last two that I chose last Sunday, needless to say, they did well. And I believe I'm going to nail it again on Sunday. So stay tuned. I'll see you on Sunday. I am out of here.